Welcome back. In our top business story, Dubai firms are being urged to use the Dubai Chamber of Commerce and Industry's rating service in order to generate more investments into the emirate. Quoted in a local paper, Dr. Bilaid Retab, the Senior Director in the Economic Research and Sustainable Business Development sector, stated that the credit rating service generates confidence into the market as it provides an evaluation of a company's credit history and acts as an effective risk assessment tool. He added that the setup of the system was inserted with the aim of enhancing levels of transparency and credibility of companies. All companies in all sectors in Dubai are eligible to apply for credit ratings and are rated according to a worldwide standard. In 2011, 181 credit rating requests were received by the Dubai Chamber, whereas in 2010, 260 requests were made, and Dubai Chamber is urging companies to sign up. 47 requests have been made so far this year for January and February. Trade volume between the UAE and Bangladesh is set to hit the $1 billion mark for the financial year ending July 2012. Trade with the UAE hit nearly $900 million between 2010 and 2011, with Bangladesh's exports at $125 million and UAE exports at $770 million. The UAE is the largest overseas market for Bangladeshi workers and is home to 700,000 nationals. Figures show that 250,000 Bangladeshis gained employment in the UAE last year, with $2 billion worth of remittances to their home country, a figure that the UAE-Bangladesh ambassador sees rising. In terms of investments from the UAE to Bangladesh, ceramics, telecommunications, banking and the construction sectors stand at the $3 million mark. DP World announced in a statement that it will repay a $3 billion loan in April. That will mature in October. The repayment will reduce the company's debt to around $4.7 billion, with a cash balance of around $1.2 billion remaining. It added that it is looking to set up a $1 billion 5-year revolving credit facility, and the paperwork is nearly finalised. DP World stated that the new facility will be used to manage cash flow and investment in their portfolio. And let's now take a look at the stock indices across the GCC. And to discuss the trends in the week ahead, we earlier asked Gaurav Kashyap, the head of the DGCX desk at Alpari Middle East, DMCC, what he sees as the key events of the week.
Well, Laura, it was a light economic calendar and trading last week, and we can expect more of the same this week. Although we have a very light economic calendar, we don't expect to see too much volatility or too much crazy pricing swings. Last week, it was all about the global growth story. We had the Eurozone, Chinese and German PMI numbers coming weaker than expected, and as a result, we saw a lot of sell-offs in those currencies. This week, we also focus on the global growth story with a couple of key data that I'd like to point out to the viewers. First and foremost, with regards to the euro, we kicked off Monday's session with the German IFO reading, which is surprisingly trumped expectations and the previous reading, and it actually contradicted last week's German PMI reading. So this saw a little bit of risk appetite coming back into the euro crosses. But by far the headline number for the euro will be the flash CPI, which is the inflation reading for the Eurozone area on Friday. Now we're expecting it to come in less than 2.7%, which is the previous reading. We're probably expecting to see it at 2.5% because of a decline in the non-core components such as food and energy pricing. Now, if a number comes below 2.5, then we can expect more sell-offs in the Euro USD. But overall, not too much happening on the Euro this week. We're probably expecting the pair to trade between 130 and 133 this week. The UK also, we have GDP readings supposed to be unchanged. That pair should remain between 157 and 159. But in the US, we're focusing on durable goods, which should bounce back from last month's weak reading of minus 3.7%. The US GDP reading will remain unchanged at 3%. And of course, we focus on the Chicago PMI at the end of Friday, which is expected to fall between 60 and 64.